to the channel. For those of you guys who are just coming from like random YouTube world and want to check out like how to learn support and resistance, hi, keep watching because this will show you the basics of support and resistance, what it is, and how to mark it on a chart, because it's so important to know when learning to trade anything, not just like Forex, any of the markets. Learning support and resistance is one of the basics, and it's very important to know how to do it correctly. So keep watching for that. Those of you who are from the Discord community and have like been struggling with this a little bit, because a lot of my content does require you to know how to do certain markups on your chart, and one of those is support and resistance. So even though I am tirelessly working on very minimal market analysis type of strategies for you guys that are a little more beginner friendly, I am still working on that stuff. So while that is getting pumped out and back tested and data collected, I wanted to like get you guys a little more comfortable with doing support and resistance. Please watch this if that's something you're struggling with. Some of you have been killing it with all of this. You don't even need to just skip on through, but leave a thumbs up for me. I have 3 different ways I'm going to split up this video, so check the timestamps below. Part 1 is just the basics. What is support and resistance? How to do it. Part 2 of this is going to be what I mean when I'm telling you guys trading a breakout of support and resistance. And then part 3 is just like showing you how you would trade it zone to zone. Those of you guys who are in the Discord community and are using the indicators that come with Perfect Entry membership, I'm not going to put them on here for this video. But you guys understand what I mean. Go back and rewatch my other videos for those indicators. What I mean is waiting for those indicators to line up after you've had a breakout from support and resistance or a rejection. And I'll show you guys that in the video here. For those of you guys just looking for the free content version of it, I don't want to like make this like a salesy type of video. I just want to have you guys get the free content because this is so important for anybody trading. So I wanted this to go out to everybody and not like make it one of those like strategy type of based videos. This is just for pure learning purposes, just educational purposes. So take what you need from it. If it's not for you, don't worry. I have a couple more videos coming up that maybe it is something you guys need. Spoiler alert, one of them is finally an Ethereum 5-minute scalping strategy that looks pretty good. So I'm pretty excited about that because I have been really working on that. So that one will be coming up soon as well. All right, let's get into this. So here we go. I just picked AutoCAD. You guys, whatever you want. When you are marking up support and resistance, you want a higher time frame. The higher the time frame, the stronger the trend. Like that's what you want to see. You want to see movement going in a direction and having a nice strong trend. You can see you have a massive drop. Each one of these candles is an hour. So you want to be trading along with that trend. From the 19th of July all the way until August 1st, you have nothing but just sells. You just can sell the entire time, and that is something that you would love to be getting into, something like that. You can see a nice uptrend for a couple of days as well that happens. These are things you would like to be looking for, and that's why support and resistance is nice, because it can allow you to get into these moves when it breaks out from something versus just sitting in this kind of situation where you're just consolidating back and forth. Nobody wants to be sitting in all of this messiness. So that's why I personally like trading with support and resistance lines and trading the breakouts of them. So me personally, I mark up on a 1 hour because I am a day trader and I tend to lean more on the scalping side. I have tried really hard to get like better at holding trades longer, and I'm starting to like appreciate that and love it a lot more. Old habits die hard, and I am a 1 hour markup person. But you can see looking at a 4 hour, it will cancel out a lot of that noisiness that you are just seeing on the 1 hour, so you can get even stronger support and resistance areas. So if you're somebody who is looking to trade higher time frames, the 4 hour or the daily are going to be your best bet for marking up major support and resistance. For me personally, I do like the 1 hour because I like to get in on the 15-minute time frame, and I just find it looks a little bit cleaner for me. But if you're struggling to find the trend or you're not sure where your areas are, go up a time frame for you to be able to find a cleaner area. So that way you're not getting confused too much with consolidation. So the basics here, what you're looking for is a support and resistance. When you're looking for support and resistance, you are basically looking for a bottom of an area where majority of the market and price is hitting, and it is forming an area of support. I'll show you a picture here. This is what you would be looking for. Basically, price would be sitting on this line a lot of the time. So when you're looking for this, what you would be doing, looking for an area where price touches the most. Where are you seeing price touch the most? So for here, I like this area a lot. You're having a lot of price sitting here. Here, you have more here, here as well. Here, you got a wick, some price here, some price here. So you're seeing a lot of price touching in that area. So to me, that would be a nice support area that was being formed. Some people really like using these rectangle shaded boxes, which you may see. So if you're seeing something like this on a chart, please don't confuse yourselves. That is completely normal to see. Some people just prefer this better for drawing their support and resistance zones. They like to be able to see where price is kind of sitting at along with wicks and touching a little bit better. It's just a preference for the eye as far as what your eye can see and what your mind puts together as a zone. I like horizontal lines personally, but that is up to you guys to do whatever you would like to do. So as you can see here, when you draw in the shaded boxes, you can see how you're forming this level of support where price is just sitting all along in here, just kind of forming this area where price just wants to kind of come and sit. It does do a couple of little pushes down within the zone, but you basically have this nice little support area that you've been forming within this whole zone. That is support. When you're looking to find resistance, you're looking for the top of that area. So in this case, you want to be looking for the most touches. So even though there's a little wick up here, and I see this happen a lot, you guys will draw your resistance and you'll put it way up here. You're not terribly wrong there, but the odds of it going there where there's one touch are less than where it is when there's multiple touches. So as you can see again, you would be having more touches here, here, and here. If it's easier for you to draw the rectangle box, draw the rectangle box. Maybe that helps you more to kind of see where price is hitting all of these areas and having that in there. So if you need help with that, that's fine. Keep in mind that you are on a 1 hour chart, potentially daily. Don't forget to look at the bottom here on your date so you have an idea of how far back you're looking at price. Some of you guys really do get yourselves all twisted up about how far back do you look at support and resistance. So you're like scrolling way out, way out, putting lines all over your chart. You have lines everywhere. And it's like so crazy because you're all the way back here in like March. And it's not to say that potentially price didn't shoot up here and maybe you need to go back in March and find that price. But you don't need to do it when price is down here or nowhere even near up here. Don't drive yourself crazy by making overcomplicated charts. You're just wasting time and effort. Market is nowhere near up here. Don't scroll all the way up to draw support and resistance all the way up here. You just need it down here. What is nice to do sometimes, though, if you're really struggling and trying to see if you're good, is to kind of just look at whatever the screen presents you on that time frame. Then scroll out a little bit and see, are you right in your support and resistance? Does it make sense? You can see what we marked up by just scrolling out makes total sense. You have a nice channel forming here. It's kind of consolidation on a 1 hour time frame, but you have a nice channel that you can clearly see is a beautiful support level for price and a nice resistance level for price. So price, you can see, had this massive push down. Comes down, pretty clear what it's doing there. And then as I zoom in, you can see price comes to here, kind of still bouncing around a little bit. We're not quite sure what's happening. But then you come down here and you have this happen. So we say, okay, prices, maybe it's still going down, but not quite. Then you have this push up, hits here, the same spot that hit here before, and price rejects, it goes down. Forms another area of support. So you are now forming support. You have multiple touches at this area. Price pushes back up. Doesn't break through here. If it had broken through here, we would have broken trend, but it doesn't break through there. It just pushes up, rejects off that price, tries to come back down again to support. What's it do? Rejects off support, pushes back up. We are in an area of consolidation now. So when you guys hear me say try not to trade consolidation, this is what I mean. When you're looking at something like this and you're like seeing that it's clearly stuck in this area between these two zones, you really don't want to be trading this. It is not impossible to trade consolidation. Actually, a lot of people do very well trading it, but it is a little bit more advanced than just like learning basic support and resistance. So for those of you just learning, don't look at this as like, oh, I could trade that. This looks easy. It's not as easy as you think. So please don't get caught up in the idea of like, oh, I just want to trade consolidation, because all it takes is for a breakout to happen and then you lose. So you can see up here, it consolidates a bunch in this smaller area here, and it's just testing all of this resistance. It's just testing a bunch up here on this resistance zone, never breaking through it. And then it rejects again off of there. Price comes down to support, and just constantly happening. So here you can see what starts to happen at this point. For those of you who are still kind of like new, is you're starting to see more momentum getting shifted to a sell. But you don't have an actual breakout just yet. What does it do? Price comes back up again, keeps testing, comes back to support. You can see this happening over and over and over again. This is what I mean by like you guys need to be patient. You need a clear breakout from these areas. When I'm telling you guys to trade breakouts or rejections off of a support or resistance zone, I'm about to show you what that means. So hopefully you skipped forward to the timestamp if that's what you're looking for. Okay, so here's what we're looking at. This example here. What I want you to look at is in the past real quick. Let me scroll out so you guys can see. Every time that you see a nice rejection wick happening, something like this, those of you who have done your homework and you know a little bit about candle formation and candle reading, you would know certain candles signal a potential reversal is coming. This is a beautiful reversal signal right here, happening off of a key area of resistance. Price tries to come up and push out, but it fails. It gives you a beautiful rejection candle. So this is why you guys need to learn your candle reading and putting like all of it together, because this here is a huge red flag to me to be like, whoop, I'm not buying. But a lot of you are. You're buying because you're like, oh, momentum. It's going with momentum. It broke out here. That little peak up and then come down, that was not a breakout. You also need to be waiting until the close of candle to take your trades. Don't get caught up in the candle formation of this and thinking, oh, wow, the candle's still being made on this 1 hour time frame, that you're like, oh, it's going up, it's breaking resistance, it's time to buy. It is not time to buy until this candle has closed and that 1 hour is up. Because look what happens. It closes way down here. It just peaked up here, tested it, and then market makers like, nope, not happening at that price. And it came down and closed here. So this is what you want to see, a nice, beautiful rejection candle. Next step you would do, if you are somebody who is feeling more confident in your chart analysis and your candle reading and all that, you would be looking to trade this. You would be looking to trade and get in on this trade. So you could potentially go for a short position here at close of candle. This is like kind of naked trading, not really using any indicators. And you would be targeting your area here as far as your zone. I am more cautious. I would not go all the way to the bottom of the zone. I would be going to the top of that shaded zone. Just because there's a good chance that price may not come all the way down. It might just come and test the heavier tested area. So that is trading a rejection off of a resistance. So for those of you who do use the indicators, I don't want to make this like a whole strategy video for you. I'm just showing you what I mean by the breakout. So I'm saying if you are comfortable with your chart analysis, you would be seeing this happening a lot sooner. But Pip Hunter does get you in around this point here. Let me get rid of these drawings so you're not confused. That's not a moving average. So let's just show you what this would look like. So I showed you the naked trading markup. This one is going to get you in a little bit later because, one, all indicators are delayed. They all lag at some point. But they do help to confirm a little bit stronger of an actual trend. So that is what would be nice about it. So you'd be looking at something like this if you were using the actual Pip Hunter indicators. And you'd be getting like a 1-to-1 risk to reward. That would be what I mean when I tell you to trade rejection off of support or resistance with the indicators. So obviously there would be other indicators on depending on your strategy or whatever if you're using the paid indicators. Your first take profit would be the support zone that we've already identified, because the support zone is the more probable area for you to take a win. So don't get so caught up in making some crazy like risk to reward situation. You want to be going for the higher probability of getting your money. So although a one-to-one is not the best risk to reward situation, it is the higher probability of you making money on this trade due to the way that the market has been moving. It has been ranging in this consolidation. You don't know that it's going to break out. We only know it because we can see it right now. But we don't know this if you were doing it in replay that any of this over here exists yet. So you want to go with the higher probability. Once you've gotten here to your take profit, you can just take partials at this point in your trade. You could take something like 50% of your trade, or maybe you would take like 75% of your trade and let the rest of it run to your next area that you're going to mark up as your take profit 2 zone. The way you're going to do that is you're going to zoom out and look for your next area of support. So we've broken through this area and you are now here. So let's pretend we're at this point in the markets. So your trade is well in profit. You've already taken your take profit 1 over here. You've gotten, let's say you took 50% of your trade. You are not moving your stop loss yet. You're leaving your stop loss up here. You are not moving it yet because we are not cleared out of this zone yet. We still have a retest to come back and do, which you can see happens. Once that happens, we can move in. And I'll explain that in a second when I show you how to do this. So what we're doing now is looking for our next area that we want to target. If you're trading this example, you would be looking to make a new lower low here, and that's where you would be targeting. So say we got this breakout that we saw that we circled, and markets in around in here, kind of coming around, retest up in this little area here, get this little retest, and then market would come down here. This is where you would be targeting. You would want to target a new lower low. You would want to retest the last low and make potentially new lower low. So that would be your take profit too. I know a lot of you are probably like, that's not a lot. That doesn't look like a big move. Remember, you're on the 1 hour. This is a lot. This is more than most people need in a day. So don't forget, your take profit 1 was all the way up there. And now we're targeting this one. You got another 58 pips with the rest of your 50%. So you could either, at this point, take the full trade and just close it out, or you could continue trading it, doing zone to zone marking up. So next thing you would do, now that you made a new lower low, is you would have to probably bump up a little bit on your time frames to find out where price was. But this is like how I would do it, guys. So this is where you're at now. Our next area we would be targeting would be, I'm just doing this on the fly with you guys. So we would probably be looking to get, this is a 4-hour time frame, so these are big moves. Keep that in mind. If we're here, I like this area right here. I will mark it so I don't lose it, and then we go back to our 1 hour because that's what we're trading on. And now we zoom out. So let's see what happens here. So we've already made it to our take profit 2, which was here on this zone. Oh, and we got it. Okay. I'm kind of doing this on the fly with you guys because that's really how I like to do it, and I think it helps you guys. All right, so that's our take profit 2. So we took 50% here, take profit 1. We're good. This is our take profit 2. We could take, I don't know, let's say we took another 20% of the trade off. So now we have 70% total secured. Let's write that up here. We have 70% of your trade secured, and we now have another 30 to run. Let's say we took 20% here. So you still have a 30 left running. And because you like your trade, you say this looks good. And then same thing you're doing anywhere else, like up here in this zone where you're testing it. You're just testing. You're just testing again. So you come down here, you retest this area that you created as support. You come back up, retest this resistance. What happens here, and I want you guys to understand this, is that your previous area that was support, this is like something you guys are messing up. Your previous area that was support, I'm sorry for its horrible handwriting. Your previous area that was support is now going to become your new resistance. So this is your new resistance now. So what was support now is becoming resistance. If you don't understand that, go back and like keep watching it. Your support that was here for this whole zone in here, this was all support for this area, is now becoming your new resistance because you've broken through it. This is your new support line, and now the old support line is coming up here and rejecting here and rejecting here. So this is now your new resistance. Then you come back down to your supports, and then you're coming back up to your resistance. So I hope that makes sense. If you don't understand that, just like keep trying to rewatch it or like comment and maybe I can make it clearer for you. All right, getting back to this hypothetical trade we're taking. So now we're targeting our new take profit 3. Oh, my handwriting gets worse and worse with the video. Okay, so this is our new take profit 3. So you can see when you finally get your rejection off of your resistance line here, and then the market comes crashing down here, like you can see, to hit your take profit 3. And that's where you can take the remaining percentage of your trade, or if you still like to trade, you could keep holding it. What I want to tell you guys to do, though, is don't move your stop loss too quick. A lot of you guys do this. So you can move your stop loss once you're 2 zones away. So even though a lot of you guys like to move it really quick, you don't want to move it when you just first break through this zone because it may very well come up and retest up in here, and then you could have gotten stopped out. So you want to wait until you're another zone away. So once you've broken into here and you're like now in zone 3, heading towards your take profit 3, that's when I would tell you go ahead and then move your stop loss to slightly in profit. So your trade would look something more like this. I don't remember the exact area we got in, but you would like, you would be looking something more like that, and now you're down here. So you're completely risk-free at this point if you decide you want to hold beyond that. And at this point, when I want you guys, at the point when I want you to actually break even, you have already secured your take profit 1, and you've now secured your take profit 2 over here. You're just bouncing around in this area. So then you can move your stop loss. So once you've secured take profit 1 and you've secured take profit 2, you can move your stop loss to break even, and you're good to let it kind of do its thing and like just let that 30% or whatever percentage you want it for your partials to just run risk-free because you've already secured 70% of your trade at that point. And maybe the other 30% does come back. In another example, perhaps it would come back and hit your stop loss. But no big deal because you've already secured 70% of your trade, so you can't lose. You're already at break even, maybe even slightly in profit for some of you guys with like commissions and stuff. Make sure you cover it. And it's like not a bad trade then. You still made money on it. In this example, though, I mean, you could have even gotten your take profit 3. So once you got there, you could have, like I said, either closed out or decided to take partials or whatever you wanted to do. So I know that was probably kind of confusing for some of you, and I probably lost you on it. I'm sorry if I did. But I'm going to go through like a replay mode with you guys just so you kind of get it. If that part like totally lost you, just watch the replay mode if you're better at watching it in an actual moving market. All right, so gonna just quickly show you marking up my resistance, marking up my support zones. So I like I said, sometimes you got to scroll out a little bit to just like make sure it makes sense where you're at. And I already told you guys I like horizontal bars, just the bar. I don't like the whole zone thing. So, you're just going to have to bear with me through this example, but I want to show both. So if you're somebody who likes the shaded boxes, you just got to see it. If you're somebody who likes the bars like me and you don't mind, then here you go. You just know, same idea with the shaded boxes. You just the general vicinity of where price is kind of the most. And so that's what I like there. And we'll do a couple more. Do not go crazy marking up. Some of you are like here and here and here and here. And I'm like, golly, how do you know where to, like, your trades are so small and like so tight together. Like, you can make anything look like support and resistance if you try hard enough. So try not to do that and go crazy marking it all up. You just want like major areas that really stick out to you. Don't overcomplicate it for yourselves. And don't overdraw them. Draw them as you need them when the market gets to that area. That's like I said before, you don't need lines all the way up here. Who cares about what's up here? That was like months ago, and price hasn't been there in forever. Price is down here. Worry about what's actually happening in the current market. And if for some reason price shoots up this area, then you can quickly come back in and add a couple of lines in. But you don't need to be adding them in the entire years worth of support and resistance. You're going to drive yourself crazy. If you guys are like really on higher time frames, you can come down to like the lower ones and draw in what I call like minor support and resistance if you're really struggling. Use it as like a guide to help recognize potentially like an area where price might consolidate. And that's like what I'm saying, where you hit in these smaller areas in here. You can see price kind of likes to bounce around and consolidate in there. But most likely these areas will eventually break them if they're a minor one. You just might want to kind of recognize it as like if price is sitting there for a while and you're like, oh God, like I'm just stuck in these trades so long. Like what is going on? If you kind of like peek out and you're like, oh, like I get it. We're just bouncing around this price. All right, I'm just going to have to hold the trade. So that's something you may see a little bit, but try to look at the bigger overall picture, like the bigger overall area where price has been traded. Okay, so let's get out of this and let's get some more on here. I do like this area. I'll go kind of got touches here, and you got all kinds of stuff happening here with price. And let's not forget this bottom one. So we'll have right about in there. All right, so I'm good with that. I don't like to put more than 4 on if I don't have to, especially on a 1 hour. And we're gonna watch the replay, and I'll show you guys how I would look at this. And once again, I'm not gonna do this with any indicators because I know some of you guys don't have them. So what I mean by trading a breakout. So I showed you a rejection example. I'm gonna show you a breakout of support and resistance and how you would like trade the breakout and what I mean by that. So, all right, let's play it and you guys will see what I'm talking about. So you are bouncing around on the support line. For those of you who like your boxes and you like need it to see, I'll give it to you because I know like some of you are going to be like, I can't tell. Okay, this is what you're in. Like think of it that way for those of you who like your little boxes. So some of you, if you're a line person like me, you can just kind of see already like, oh, price didn't pass this area. If you're a box person, you're like freaking out with just the line. So I get it. All right, here we go. So here's your box just in case. So let's go back to replaying. So that was not your breakout, but what we essentially are looking for is a break from this area that is support. So let's not forget, for those who are still learning this and are like, what is this lady talking about? This is your support line. Your price is sitting on here. Price is sitting here, sitting here, sitting here. This up here was your resistance. Price rejects. Price kind of gets close but pushes down. Rejects. This is your resistance for this zone. Here, this one. This, however, I'm probably going to lose you guys again. This, however, is also your support, though, for this zone. So here it was support. I'm hoping that makes sense for you. It was in the past at one point support for this whole area in here. When it broke through, it now forms a new support level, and your old support level is now becoming your new resistance. I hope that makes sense. I think that does. I think I'm explaining it okay for you guys to understand, but I don't know. All right, let's keep going on. Let's keep playing it. So we're waiting for price to come and dip out under this shaded box and really drop into this new zone to trade with it. Oh, golly, we got to speed this up. We'll be here till forever. All right. So price is just loving that area, and that is very typical to see when you're trading support and resistance and zone-to-zone stuff. It will really like to sit around those areas. If you're seeing that happening, that's a good thing. That's a good sign. It means you marked up a strong area. You're probably right on where you marked it up. Okay, so what we got here, and we'll zoom in, is we finally got a breakout from this shaded box. If you're not sure, kind of look to the left and be like, did we really break out? We did. There is a small zone here and here that you could just be retesting, and that is up to you guys as far as like how long you want to wait for a breakout. If you're uncomfortable trading it too soon for your breakout and you're like, I don't know, then don't worry about it. You could wait a little bit to see if it does break out some. just know that you may end up in some drawdown because it may need to come back and retest. But if you've done your markup well, it should be fine. So let's keep moving and watching. So here you can see like what I'm talking about. You get a little bit of a retest and then you get your actual drop that will probably happen soon. There it is. Okay, so as you can see, it is dropping. And when I'm talking about trading the breakouts, you could have gotten in a little earlier, but you would need to be making sure that your stop loss is slightly above your previous area of support. You can see price comes right back up, retest that area exactly where our support line is drawn, and then drops again. So some people do get in a little too soon here with your breakouts. And, if you were a little unsure because of the previous area where price was, don't worry about it. You can wait for that little bit of a pullback and a retest. If the move had hypothetically just dropped down, then that's okay. You missed the move. Don't force your trades. Don't have FOMO and be like, oh, I should have gotten in and then get in too late. Like, you want to be making sure that you're trading this smart, these breakouts. If you saw that it comes back and retest and you get this nice rejection wick off of that area, you're good. You're good to go. If you want to wait until you get the market down here below the previous areas and you're truly broken out of this whole zone and you're broken out of over here and you're like, okay, I feel comfortable now, then go ahead and wait a little bit. Just make sure you're not waiting when the move's like way down here. You're too late. Okay, so I'm just going to keep playing it through so you guys can kind of get an idea of how this works. And you can see you're just dropping and coming back, retesting, and then dropping. And yep, it's just making like normal market structure here. If you don't know basic market structure, please go learn it. But basically what you have is you have your market dropping here, and then you have here. And you have a bit of this higher low and a new lower low. And then you have a higher low and a lower low and a higher low and a lower low. Beautiful market structure to be watching and seeing happening. You get your higher low and a lower low. There is nothing about this trade that would make me worried or nervous to not hold it to what would be here, should be your take profit area. So you would be entering in after the breakouts. I will mark it here with a line for you guys so I don't confuse you. There's a lot going on this chart. So you would be entering in after you saw a clean breakout of this area. It would be happening somewhere in either this area here if you weren't worried about it, or potentially maybe you waited for that pullback and retest, which is totally fine if you're a little concerned and more cautious, and then you would be getting in there instead. Having your stop loss slightly above your support area, like I said, and targeting down here, which looks like a really nice trade. So you would look something like this and targeting there. A nice 1 to 3, so great. And you can see as the market was going, it just hit your take profit. So that is exactly how you guys would do that. You could continue to hold if you really wanted to, but in this case, this is a really nice trade. It took quite a while. My goodness, that takes quite a while, but you are on a 1 hour chart here, just showing you this example. On smaller time frames, obviously it would go quicker, but yeah, that's how that trade would work. And that's how you would just be trading a breakout. So you'd be waiting for it to break out of your zone and show that there's clear momentum in that direction. So that is how you would trade something where you would have the breakout. So you would be, in this example, you were breaking out of support. So hypothetically, if you were looking for a buy example where you have to break through marked off area of resistance, then this would be an example. What you would be looking for is, one, either a rejection off of support, and you would be looking to buy, or you would be looking for a breakout of the resistance, which you can see clearly happens here around this candle here. You've broken past this area marked as your previous high. You broke through here, this area that had rejected off of your resistance, and you've now created this new situation. Like around this candle would be your entry candle, and that's like how you would be looking for it. You would be getting in at close of candle. As far as your stop loss goes, a lot of you guys do this. You put it right here on your zone, and you know what's going to happen? You're going to get wicked out. Price will come down. Market makers aren't stupid. They know where you're putting your stop losses. So you need to think, where would everyone else put their stop loss? And everyone else will put their stop loss right there. And you need to think like, well, what makes sense to put my stop loss? What makes sense to put your stop loss is slightly under where everyone else is going to put theirs. So don't be too stingy with your stop losses. What I like to do, like a little trick of, is just look to the left and mark up like one of those like minor zones that I kind of was talking about. Somewhere where you see price hitting a lot that's making like a minor area. Price is hitting here, it hits here a bunch, hits here, and then you can see what's hitting here prior to price going up. So that would be my area where I would be slightly under where everyone else is looking for stop losses. And as you can see, it's actually like a really good stop loss because when you're looking in the future, you would have been really safe there. And then you'd be targeting your previous marked area that we have, and that is how that would work. And you can see you would have been fine in that trade. I know a lot of you guys struggle with this trading zone to zone. And by zone to zone, what I mean is from support and resistance to another level of support and resistance. Those are creating zones. So I know that that's kind of an issue for you guys when I'm telling you to do that. I hope this helps you guys understand a little bit about that. I also know that some of you really struggle because you want rule-based strategies. Working on getting you a little bit more of those to help get you guys profitable. But in the meantime, I would love for you guys to keep working on your support and resistance and your markups, because those will help you weed out all of the bad trades that come with those rule-based strategies. So rule-based strategies are great. They are great to get you profitable and get you more consistent. But when you can start adding in market analysis on top of those trades, add them together, that's where you're going to start seeing crazy win rates. That's how I get the win rates I have, because I take those rule-based trades that I've back tested a ton, I have set rules that have to happen, and then I apply this kind of stuff. And no, I don't always go for a certain risk to reward. But all my strategies, when I'm back testing them, before I ever put this kind of stuff in there, I make sure that I have a set amount that I go for. Otherwise, it's not a trade I will ever take. A lot of you are having issues with this. What you're doing is you're taking like massive stop losses, and then you're taking these little tiny wins. And you're like, oh, this looks great. That is a horrible risk to reward situation. And although I tell you to go for the more probable trades, I want you to be smart about the actual trade itself. Does this make sense to you as a risk to reward situation? This makes a lot of sense. This is a great risk to reward trade if you saw this happening. But like I said, if you had to do some crazy trade, like where your stop loss is here and your next area of resistance would have been up there, and that's your trade, that is a horrible trade to take. Do not take that trade. You have to use some sort of risk management plan when trading this way. The reason I like this, though, is because when you're trading support and resistance and zone to zone, I think that there's a higher probability of getting your trade to a certain point in the market where price has loved to be, like versus me saying I have to have a 1 to 4 all the time. Because what happens if I have to have a 1 to 4? I just missed my trade. When I could have just had it. I was plenty in profit. When I say don't be greedy about it, what I mean is like don't be stupid about your trade. Take the higher probability trade. Take this area. This is a great trade to take. But please don't be dumb and be like doing some crazy risk the reward stuff that makes no sense, where you're like risking like 5% of your account and you're risking like 10 times the amount that you're getting back in your reward. That's a huge problem I'm seeing with you guys. So when you're doing this stuff, the reason I say it's a little more intermediate, slightly to advanced type of trading is because you have to be putting together so much stuff into it as far as trading support and resistance as a strategy. So if you're struggling with it, like I said, just keep watching the channel. I have stuff that's coming up that is like just indicator based, that is proven to be profitable and requires no marking up. And that will help you guys get consistently profitable, as long as you follow the rules. And then you can kind of work on all of this, keep practicing this, and start adding it in to help weed out some of those trades that maybe you don't want to take. But, I really want to see you guys start doing this. I've seen some of you guys get amazing at your support and resistance and trading the breakouts or trading the rejections. And I love it. I love seeing you guys get really good at like basic markups. I personally just think it makes you a great trader. It will make you a stronger trader in the end to be able to do this kind of stuff, because like I said, it's going to help you avoid bad trades. Like the trades where you're like, I don't know if I like this trade, you won't take. And it will also help you target more realistic take profit zones instead of being committed all the time to like a set number for your reward. You will like have a better idea. Like maybe you say, hey, I go for a 1 to 1.5 all the time, which I do personally. I almost always go for that. If I think I could get a 1 to 2 because of the way that my support and resistance looks, then I'm going to look for a 1 to 2. I may secure a certain amount at 1 to 1.5, but I will hold for my 1 to 2 because that's the more probable area of it going. So thank you guys for watching. If I lost some of you guys on that, I am sorry. I didn't want to make this like a strategy video like I said earlier because I don't want to get you guys too caught up in it, but I want to show you guys like how you can trade this. And for those of you guys who like aren't part of the members, you're just following me on YouTube or whatever, I want to give you guys some like useful content as well. And this is like literally the most useful thing I can think of. When you guys ask like, how do I trade? This is really it. Like, I know a lot of people say it looks easy. If you're brand new and you just found this, I know you're probably like, what did she just do? But for those of you who are kind of like into trading a little bit already, you're like, oh, you make it look so easy. You just trade zone to zone. Like, no big deal. Just because it's a basic concept doesn't mean it doesn't work. There's a reason that this is such a crucial thing to learn, and it's because it works. As always, if you guys have questions, please feel free to leave them below in the comments, and I will answer you back. Some of you may have questions about like what the heck this pip hunter thing is that I just threw on there for like the one thing. That's linked below. The pip hunter indicator comes with a perfect entry membership. That's linked in the description box. And I think that's it for this video, guys. I will see you in my next one. Okay, thanks, guys. Bye.